right? And even though you lost, y'all see it right here, even though you lost 7 trades, you won 3, you still came out with a profit of $45, and your net pips are 100 pips is what you gained on the setup. This is what I'm talking about, right? This is what I'm talking about. I did a video about 2 days ago where I said, you do not have to be the best trader in the world in order to make money in this market. And a lot of you guys were like, how does this work? And y'all didn't know. So I put this video together to hopefully shed some light and some clarity on exactly what I mean and how that works. Now, I know a lot of y'all are out here big money grip, trading standards and whatnot. But for the rest of everybody like me who started out this way, we're going to look at some much more reasonable numbers so you understand. All right. So y'all know the stats. 90% of traders fail. And I think there are actually 3 main reasons. It's a lack of self-control and risk management. And I was going to say over leveraging, but over leveraging can actually fall into the category of risk management. All right. So in that past video, I talked about a baseball player, the highest paid MLB player right now. His name is Mike Trout. Mike Trout has a batting average of 30%. He gets paid $37 million a year to be right 30% of the time. So my point in saying that was that you do not have to be 100% trader where you win every single trade. You don't even have to be 70% right. You don't have to be 60% right. You don't even got to be 50% right. Now, the numbers that I'm going to show you are a little bit extreme. I would hope that you shoot to do a little bit better, but I just want to prove the point so you guys understand where I'm coming from. And I know a lot of people are not taught this when they start trading. And so I want to break it down for you. All right. Let's look at the math. All right. Let's say you have a setup. It's a 3-to-1 setup. This is important because you need to understand risk to reward in order for all of this to work. Okay. You're trading at 30 cents a pip, and I'm looking at US dollar for this example. Let's say you have a setup that has a 30 pip stop loss and a potential 100% gain or 100 pip gain. Right. So if you have a 30 pip stop loss, you're trading at 30 cents per pip. Then if 7 of your trades go wrong, you're losing $9 a trade. So 9 times 7 is 63. All right. So you got a 30 pip stop loss, but you're risking 30 pips in order to make 100 pips. Okay. Now, let's say that you just entered too early or something. Let's call them 2 different pairs, something. Even if you played the same setup and one went right and one went wrong, let's say you get it right on the second one. And all you have are 3 winning trades. You're still trading at 30 cents a pip, okay? And let's say it's 100 pips on the table for take profit. That's $30 that you stand to make. Let's say you only win 3 of those trades. Now, you won 3 of those trades. You've made $90 gross. That's what you've made gross. But if we look at and we say, okay, let's look at the results for the entire week. Then you got $90 profit on the winning trades, $63 loss on the losing trades. You still made money, $27 net profit. Now, again, somebody commented and said, we got different definitions of what good money is. To me, good money is money that I didn't have before. And so that's still good money for somebody somewhere. And then you got to look at the larger scale. You are looking to compound. So if you are on the positive, as you're moving throughout this is a long-term game. This is not something short-term where you're trying to hit a lick and be done. You playing this for the long haul. Okay. So now this is what happens when you manage your risk properly. So a lot of people are like, okay, well, how do I do the math? You can do the math by hand for sure. Or you can use my multiple pair risk calculator. I created this calculator, I want to say right after I started feeling better from COVID in 2020. And I created it because I kept losing and I couldn't figure out how to quickly and easily do the math so that I could hop in when I find a setup. And so this tool has been very instrumental in getting me to another level as far as trading. All right. So I'm just going to walk through, show you a little bit about how it works. And you can pick it up for a very nominal cost by visiting www.forex.sizecalculator.com. All right, so the way that this works, you put in, once you've made a copy of it, and you have your own, because you cannot directly edit the copy that you download from. What you do is you put in your account size. Let's say you have a $1,500 account. Let's say you are trading odd CAD, and let's say you don't want to risk any more than 1.5% on the trade. So that means if you look over here, once we populated this field based on our desired risk, it comes up that is $22.50 that we don't want to lose more than. And so we're basically telling this, size my position according to this so I don't lose any more than $22.50. Let's say you have a 50 pip stop loss on your setup, right? And you've got to enter the number of positions in order for this to yield a recommendation that you're good to go and a lot size. If you put this in a position, the number of positions you want to take, and it still says do not take this trade, it means that your account is not large enough to handle the setup that you're trying to take based on your desired risk. So you see the parameters that we've entered. We got a $1,500 account. We're trading odd CAD. We have 1.5%. There's a stop loss of 50 pips and we only want one position. So if we want one position, that means that you could trade 60 cents per pip. Okay, so let's look at it. We trade 60 cents per pip. Let's go over here to the other calculator. We have a stop loss of 50 pips. The account size is $1,500. And then we said 3-to-1 setup minimum. So if you're risking 50 pips, you need to be making at least 150 in order for this to make sense. Okay, so you are risking $22.50 in order to make $67.50. Okay, so that's the top half of the calculator. Let's go down and let's fill this part out. So let's call it a buy. Let's call it active. We're going to say 50 pips to make 150. I'm not going to put in if it's won or lost yet. And let me lower the account size 1,500 up here. And then let me drop my percentage down to 1.5%. Right? So the same information that we got above is what we have over here in this far right column. That's your risk to reward. So it says 3. That means 3-to-1 setup. Now, sometimes it'll have like 3.15, whatever. If the big number, the number outside of the decimal point is 3 or above, then it makes sense to do. Okay. So let's go ahead. I'm just going, let me see. Can I copy? No, if I copy it down, I'm gonna change the formula. So I got to go in and manually enter this. So I'm gonna just put this in 150. All right. I'm gonna plug it in. Buy. And now this is just for purposes to show you guys. You don't have to win every trade in order to make money. Okay. Now I know I'm moving a little bit slow. I'm trying to put in 10 of these so I can show y'all my point, right? 50, 150. I should have been putting in the win column too. So I could have 3 that are won, 7 that are lost, 50. And really, if you're taking this many trades, you are definitely exceeding the 1.5% for the total account. So you see up here, it gives you a cumulative. So it says desired trade risk. So each trade is 1.5%. If you want it less than that, then you would have to adjust. But we go to odd CAD, we go to buy, we go to active, and then we go to stop loss 50, 150. Now this could be a series of different trades, but for the sake of trying to move through this quickly, I'm just going to do them all the same so y'all can see. Okay. All right, let me see how many I got. Tell me I got at least 10. Let's see if my math is right. 1, 2, 3, 4, 5, 6, 7. I got 3 more to do. Okay, so odd CAD, buy, active. And I like this tool because I can even use it for my phone, you know, so it's easy for me to access, easy for me to plug in. And what it does is it calculates based off of the account currency pair. And then y'all won't have to be like me. I argued with the people at the broker because I didn't understand. When I did my math, there was a couple more dollars in it I didn't account for. for the exchange rate. So the calculator, has real-time updated data on what the exchange rate is. So the number should be very, very close to what is actually going on to the market, if not dead on. Okay. So I believe I have 10 in here now. Let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I have one too many. So let me get rid of this. All right. And then you see up here, 15% risk. So you would definitely have to take this down in order to get to your 1.5%. And I don't even think you could take it that low. Yeah, you would have to trade 10 cents per position if you took 10 positions. But to go back and prove my point, now let's mark 3 of these as won and the rest as lost. So I'm selecting win, and then I'm hit lost for the rest of them. Loss, 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 loss. Now look, based off of this setup, even though you lost 7 trades, so look over here to the right here, right? So it says total profit earned. You lost 7 trades. You still made $45. You lost. Oh, let me close these out too. Hold on. All of these are closed because it's still showing you in this total active risk. So if you change this, it shows you what your exposure is on your account based on what you input. So I'm going to change these to closed. Yeah, all of them are closed. So there should be 0 risk. Okay, so there's no active open risk, right? And even though you lost, y'all see it right here, even though you lost 7 trades, you won 3, you still came out with a profit of $45, and your net pips are 100 pips is what you gained on the setup. This is what I'm talking about, right? This is what I'm talking about. So even after losing all of that, you still make money. Now, to some, this might be like, do I want to go through all of that headache? Yeah, okay, I get it. But if the goal is long term, then, it shouldn't. This should be what you be paying attention to. So I've shown you guys how this works. You've seen the math for yourself. In order for this to play out, you have to make sure that your risk to reward is on point and that your risk management is on point too. So I hope this video helped you visualize what I meant when I made the reference in the Fibonacci fantasy video. And new trader tips. I don't know what video it was in, but I hope it was helpful. I hope it made sense for you. Hopefully you guys are shooting to be better than 30%. That takes time, that takes skill, that takes, some practice in order to get there. But you see the math right there. You see the math. So if anybody want to debate on this, let's go. But anyway, I appreciate you guys for watching. I hope that you have a great afternoon. And if you have not already grabbed your calculator, you want to head over to www.forexlotsizecalculator.com. And then if you like my videos, you like the analysis videos, and you want to learn how to approach the market like I do, then head over and click the link in the video description to register for my course that I'm going to be launching this week. I am offering 40% off. In order to secure your 40% off, you need to go fill out the form. And I'll email you and let you know details from there. All right, so that's enough talking. I'll see y'all on the next video, and I hope you have a great day. Bye.